Welcome to HSBC Global Viewpoint, the podcast series that brings together business leaders and industry experts to explore the latest global insights, trends, and opportunities. Make sure you're subscribed to stay up to date with new episodes. Thanks for listening, and now on to today's show.
Rohit Aggarwal, Managing Director at Peak 15, and asked him directly, where is your firm actually deploying money in 2026 and why? My name is David Sabo. I'm the Global Head of Innovation Banking for HSBC. I'm actually here in Singapore, where we recently launched Innovation Banking for Singapore, covering the broader Southeast Asian market. I'm thrilled to be joined by Rohit Aggarwal, Managing Director at Peak 15. Rohit, thank you so much for making the time to join us today. Looking forward to the conversation.
Thank you for having me, David. Thank you.
We're going to cover a lot, as much as we can, but some of the key areas that we're focused on are capital deployment, which sectors are attracting capital, what you're excited about as you think about the broader ASEAN opportunity. So if you don't mind, I'd love to start there at the very beginning.
I was just privileged and, very fortunate to have great support all along. It started with family, very sort of a large family and a very kind growing up years, if you will. And then over the years, I've found great support from mentors that have shaped me in many ways. And all through that, I think a constant has been a focus on purpose and values. I think many of the people that I have partnered with have taught me this one philosophy that, the most important things in life you can't measure. And these are things like kindness, these are things like impact, these are things like relationships and happiness and all the good stuff in life that you'll eventually care about, you can't measure. Even in a lot of the conversations with founders, I think we talk a lot about this philosophy of having a North Star. We say, look, if you have a North Star, everything else is easy to align because you could always sort of fall back on what is our North Star here. It's like, for example, at Peak 15, our North Star is performance, and that helps to make a lot of conversations very easy. Many times you are going into a meeting, walking out, and you're like, there's so many variables in here. But, if you have a sense of purpose, if you have values, if you have a North Star, I think that makes things a lot easier.
Well, and I'm sure a lot of the entrepreneurs who you're meeting with probably channel their own vision, their own North Star around what is the impact that they want to have on an industry, on a new technology, on a new market. You've been investing here for a while now.
Yep.
I guess I'm just curious, as you think about the current macro, obviously an incredible new technology wave, not new, I guess, but it's certainly more front and center around AI impacting every subsector. We're seeing continued shifts in terms of globalization. Tell us about kind of what you're excited about, maybe some of the tailwinds for Singapore and the broader region.
I think Singapore is in a very interesting spot right now. If you think over the past 15, 20 years, pretty much every major technology company that's, listed on the NASDAQ, or think every technology company with over $1 billion of revenue on the planet has a presence here in Singapore. That has brought in a lot of talent into Singapore. Every major financial institution is present here. That has brought in a lot of talent. Mm-hmm. So you see this interesting sort of a pool of talent, which is not just technology oriented and savvy and has grown up in sort of big tech and building these businesses across APAC and US, but also the diversity of talent. There are very few places on the planet where you could build a go-to-market team that can help you scale from APAC to Australia to LATAM to Middle East and the Americas. And one of those places, really, you could do that in the US because you have the experience and the diversity, and the other place really is Singapore. So I think we have seen over the past, say 8 to 10 years, a lot of founders from the broader APAC Australian region, and even in some cases Europe, move to Singapore because they want to straddle the dual opportunity set of growing in APAC, where the markets are still underserved with respect to enterprise technology, with respect to AI, with respect to all the emerging tech, and use this as a base to expand into the US as well. What has changed in the last 2-3 years, especially if you ask me, is that AI startups don't really need a big army of people to build a product or sell a product. Most of these products leverage a lot of sort of AI to build their own products, which means they could build with 1/10 the number of people. Like most of the AI startups that we come across and that we are funding today have less than 15, 20 people, even when they have a few $1 million of revenue. Most of them choose to go to market in a sort of self-serve or open source way. So they don't need a lot of people on day one to sell their product like you would in enterprise sales. And I think both of those things make Singapore an even more appealing place, because you could have this great sort of city, a lot of things, great infrastructure, great connectivity, safety, all of those things. And you could have a co-located team where while you're trying to build a global business, you're not distributed at a very early stage across many different parts of the continents and many different time zones and so on. So we're seeing this constant sort of inward movement of founders that are looking to build global businesses into Singapore. And that's really the opportunity set that we are focused on. But
yeah. I mean, I think in a country of roughly 6 million people, that efficiency of how these business models can get spun up, and is, right, we're in kind of, version 1 of this. This is the worst AI that we'll use in our lifetimes. That's a really interesting point. An investor once told me that you create in person, so to your point around co-locating, but you can execute over Zoom. And so I think that density and diversity of talent here to scale companies quickly with, as you said, right, sometimes 1/10 of the number of people is an incredible opportunity for the region.
Yeah, and also there are some very deep tech hubs in close proximity to Singapore. Australia is a great place to find a lot of the open source talent, a lot of the product-led growth talent, which is all the alumni of companies like Atlassian and Canva that really sort of first pioneered this movement of building billion-dollar revenue companies without having to sell face-to-face to customers. But then you also have places like India and China where there is incredible engineering depth available. So I think founders from being based in Singapore or building in APAC kind of leverage all of these unique capabilities and advantages and are building some what we call global maxima companies. I think you would hear me in our conversations refer to this term a lot. So we've been investing in the region for about, 10, 15 years, about 20 years in India and, 10 years in Southeast Asia. So a lot of the first decade, if you will, or until 2020, we saw a lot of companies kind of get inspired by what is happening in the US and launch models which compete with US, but really sometimes serving a different customer segment that, say, the US companies are not serving, or, compete on price, leveraging the lower cost structure of APAC markets and so on. But I think in the last 5-6 years, that landscape has changed a lot. In AI, it's just completely reversed, where we just see founders wanting to build global maxima companies, global maxima products. These are best-in-class products. They want to go for the win. They're not looking to play for sort of the tier 2 trophy, if you will. They want the big prize, and they're really building what are global maxima products.
Well, we share that conviction, which is why we launched Innovation Banking in Singapore. And one of the things, and I live in the heart of the beast, right? I live in San Francisco, which has this density of capital and talent and innovation and a real culture around that. But as I'm traveling the world, as I spend more time in Singapore and other parts of Asia, the quality of the founders and the pace of innovation is blowing my mind. And it's a entirely different kind of paradigm than I think a lot of people just isolated to maybe California or a US-centric view don't appreciate as much. So, that's what we're really excited about, is can we, bring some connections around, bring new risk-based capital into new markets, taking, companies from Singapore to the world, watching, these innovators really go and scale and create best-in-class companies. So we're really excited to see that happen.
Yeah, and I mean, David, look, San Francisco and Valley are like just incredible places to get started. If you will ask me what is the contrast between, say, a Singapore, founders starting their companies in Singapore or in San Francisco, I think sometimes the 0 to 1 in this part of the world is a little bit easier because you could land your first few customers without having to compete with tens or hundreds of similar startups that you would in the Valley. And that helps you get started quickly.
There's probably not been a harder time in history to try to predict the future, but that's not going to stop me from asking the question. As you think about, let's say, 2026, 2027, and let's keep it Singapore-centric, what are those things that the headlines are missing today about the market that you think, are going to be really important to watch?
I think we are just continuing to see an incredible pipeline of opportunities, especially at the cutting edge of AI and open source, where a small number of researchers, Singapore has some great universities, a lot of great researchers from places in China, in Australia, in India are moving to Singapore to start open source projects. Singapore has a very sort of supportive grant regime where it supports these open source projects to get off more than, say, in some other places that you could imagine. So we are seeing a movement, if you will, stirring up that will, I think it's still kind of the pot is still stirring before it kind of flows outward. I think we see a sense of energy and excitement around companies that are building for the world, initially distributing their products open source, and as they gain adoption, build out monetization strategies. I think this could be sort of one theme that could just surprise. Also, in a world which is challenging geopolitically, I think building open source companies where you have contributors from all around the world, be co-owners in technology, in moderation, in sort of IP, is a new way of building that we are seeing founders, or a new path to building global companies that founders are taking. So I think that is one sort of big area that we're excited about, that we're seeing a lot of companies in. I think the second, if you will be some of the large regional companies that had gone a little bit, if you will, had slowed down a little bit in the region, whether it be the great companies in Indonesia or Philippines, like financial services companies, consumer internet companies. I think they're all making a huge comeback. I think in some places it is already evident. Our biggest sort of publicly listed technology company from Singapore is C Group, which runs Shopee and Free Fire, and I think they've seen maybe I don't know what its latest stock price is, but they've seen a massive surge, tens of billions of dollars in their market cap over the past just about 12, 15 months, 18 months. And I think a similar sort of trend is brewing in a lot of the operating data of private companies. So it's not yet out there. Many of these companies have gotten massively profitable. So, it is not all yet out there because private companies are not raising capital every day and are not traded every day. So there are not new marks on these companies. But I think some of these companies will really surprise people in the scale that they've gotten to and the profitability that they are operating with.
Yeah. And it is, the ecosystem impact of that, right? Because the early, founders and employees of those companies tend to go and create other things.
Yes.
So that becomes a great, kind of flywheel for the market.
Alumni of big tech or alumni of successful tech startups is the most sort of probable next founder category. So I think we're really excited. As some of these companies see liquidity, we think it will trickle down into the ecosystem and create a lot more fun.
But, for venture as an asset class, right, it's already a fairly long duration commitment that your LPs are making. We know it's cyclical. DPI has been the big global headline in terms of kind of liquidity. Talk to me about how, you think about that, and maybe regionally some of the nuances around liquidity. Do you think about private equity is a key source, growth equity, or then even some of the regional stock exchanges that you're focused on?
Yeah, I think if we just step back, what drives liquidity? I don't think it is just the capital markets. It's the quality of businesses. When people buy businesses in public markets, or even more so in private markets, they're expecting to buy a business that can compound over a long period of time. Different stages of capital back different stages of predictability. We are at the very sort of one end of the spectrum where we go after an idea that has very low visibility, low predictability. But as you keep building, you want to get to a repeatable motion in your business, whether it be revenue, whether it be profitability. You want to get into a cadence where you could project a business over 3, 4, 5 years. I think that's the number one challenge that most venture businesses have before they can access liquidity, whether it be in public markets or in late stage private financings. If they have predictability of their business and some scale, I mean, there is liquidity available. So the way we've always thought about liquidity is that getting liquidity for a $20, $25, $30 million revenue business that's not growing fast enough is equally difficult in every part of the world as it is here. It's just that we have a lot more of those businesses here and fewer of the $100, $200, $500 million businesses. But we are getting there and it's changing very fast. We've seen that in India, where the number of sort of $100 million revenue companies has grown very fast in the past few years. We're seeing that in Southeast Asia. Another thing, David, you would appreciate is that most of the companies that were operating here until a few years back were focused on the regional markets. And we are still like, India, Southeast Asia, we are all sort of sub $5,000 GDP per capita market. So it just took a lot longer for companies to get to the scale that, companies in US, China could get to. But now that's shrinking. Like we're now seeing tons and tons of examples of companies getting started and getting to 100 million revenue in say 5, 6 years. Sometimes in now the AI wave, we are seeing companies getting started and get there, in 24 months.
Amazing. Yeah.
So I think that's changing. That's changing the outlook and the options for liquidity. If you have $200, $500 million revenue businesses that are growing north of 30, 40%, you could actually take them public on most exchanges around the world. If you have a $200 to $400 million revenue business where growth has slowed, it's a bit harder to take them public. But there is a lot of capital available to buy these businesses, and that's private equity, that's secondary financings, and so on and so forth. So while, I wouldn't want to get into the details of what has it been for us, but we've had lots of IPOs where we have had successful sort of opportunities to distribute dollars back. But also, equally, we have seen interest from private equity and secondary buyers in all companies that have crossed, say, this $100 million threshold. So, bottom line for us is how many companies that we back can get to $100 million revenue threshold, because that's the bare minimum where, liquidity options start to open up. And then as you go from there, the options just keep widening.
Yeah. No, I mean, in the opportunity for us to think about how do we bring more of those growth equity, private equity, even family offices into some of these markets that are just not as well known in other parts of the world, I think is a tremendous opportunity. But I think you're right. Your point around it starts with the quality of the business that you're creating is spot on. I guess a self-serving question. So, we are about 2.5 years into the build of innovation banking at HSBC. We'll end this year in 10 different markets with just less than 1,000 people. We have this belief that we have to have the ability to finance cash burning companies, that we have to have a really high touch service proposition, that we have to have a unique go-to-market proposition. That's all the banking stuff. What's the other impact or areas that you think we can help to take advantage and maybe accelerate some of the themes for Singapore in particular?
One thing that I've not talked about or touched upon is that we are probably one of the largest believers in fintech, given our regions. India, Southeast Asia, when we first started investing here, lacked the financial infrastructure for digital adoption. Like you couldn't do e-commerce if you don't have like payment methods, and people don't have ways to sort of finish transactions online. So we started investing in every kind of financial services, fintech, digital fintech that you could imagine. But while the local infrastructures all around the world have kind of matured, you could now have a bank account or a wallet pretty quickly in any market. The challenges that we saw in domestic fintech are all compounded 10x when you move out. And the world is only kind of getting more and more globalized in some ways. Not difficult statement to make these days.
It's not linear, but the trend is real.
But the trend is real, and as a result, people are traveling more. Travel is a beautiful use case. Lots and lots of money needs to move across borders. Companies are more global. Lots and lots of settlements need to happen cross-border. And we're seeing a huge opportunity in cross-border fintech.
I think removing friction for global money movement is something that we are 100% focused on, and we think there's actually some amazing technologies coming. So, Rohit, what's one area that we didn't touch on that you think is important for us to kind of talk about, just based on what you're seeing and hearing or observing in the market?
David, I've heard a lot of versions of what AI will change and how will it bring sort of, in some cases, depending upon which version you believe, extreme prosperity and productivity to, gloom and doom around job loss and so on. And I don't know where we'll end up. I hope it's the farmer. And I really believe that it's the farmer, which is that, like all great technologies, it will make us more productive, it will make us more prosperous, and it will be a huge catalyst, as you would think, for all markets around the world, for growth, GDP growth, and so on. But one of the most interesting conversations I've had in the last, 1 or 2 months with the founder was that one of the biggest beneficiary sectors of all of this will be healthcare. As people live longer, as people kind of want to take more care of themselves, want to have a productive life for longer, they would need more and more healthcare services. I think in the US, probably healthcare is now the largest portion of the GDP and growing. It's already at 5 trillion or something. I'm not specific on numbers. But in emerging markets, it's still very underpenetrated. So as you think, we are a very young population in most emerging markets compared to markets like, Japan or other markets, developed world, where the aging population is a challenge. I think this view of the world that healthcare will have the largest number of workers and will be the largest spend area for economies in the next 10, 15, 20 years is an interesting sort of perspective to have as we think about the impact of AI and where could be some very large shifts in spend and which areas could disproportionately create large outcomes.
Yeah, and the macroeconomic impact of that, right? When you think about labor productivity fueling GDP growth, as you think about markets where you have maybe a shrinking population, having, healthcare, not just in terms of longevity, but also remote patient care, remote patient monitoring, aging in your own home as opposed to facilities. There's an entire new wave of transformation, I think, that we can only begin to guess the economic implications of it.
And we're seeing companies in some of the areas that you mentioned, remote patient monitoring, lots of predictive healthcare for people to have a longer productive life and so on and so forth. It's a very exciting area. That we don't really talk about when we talk about AI, but I think that's one area which will see a lot of tailwinds over the next 1 or 2 decades.
Well, as a middle-aged person now, I'm really rooting for AI to move fast in that area. Rohit, there's so much more we could talk about, but thank you so much for your time. This was a great conversation. Thank you so much for your support of HSBC Innovation Banking and of our team here. And we're really excited to bring this to life with you in the path ahead.
Thank you. Thank you, David, for having me. It's been a pleasure.
Of course.
Thank you for joining us at HSBC Global Viewpoint. We hope you enjoyed the discussion. Make sure you're subscribed to stay up to date with new episodes.